What's going on, guys? Matt Wacek here, coming at you with a brand new video, and this one came highly requested from a lot of you guys asking questions about just general business things when it comes to the structure and setting one up and EINs and a whole host of other things like that, as well as on the tax side of things. How do they work? How do you file them? And when do I need to do this stuff? And I'm going to give you guys my thoughts and opinions on all of these subjects because I've done a lot of this stuff. I've spent a lot of time researching taxes and utilizing taxes when it comes to businesses and write-offs and that sort of stuff. But these are my thoughts and opinions because, one, I'm not a CPA, which is a certified public accountant, where you have to go take a test, you get licensed to be able to practice that business. 2, I'm not a lawyer. And 3, I'm not a financial advisor. So if you need legal or financial or accounting advice from any of those types of parties, you should go seek one of those out in your local area. Also, I live in the United States, so if you're somewhere outside of the United States, I don't know the rules and regulations of how your country operates when it comes to business law and those sorts of things and taxes. So some of what I'm going to mention in terms of my experiences and my thoughts and opinions on this may be different than how it works in your country. You're going to have to seek a CPA out or something equivalent in your country to know exactly how to do all this stuff. So now that that is out of the way, I want to answer the first question that has come in, and that is, when do I register a business? So a lot of entrepreneurs, and I agree with this for the most part, will say, do not worry about getting a business registered. Focus on getting cash flow coming in. And I understand that mindset because otherwise someone's going to be plagued and they're never going to freaking do anything, which is a disaster. So that needs to be a prime core focus, is to get things that are going to make you cash flow or generate you revenue, get them built and get them going, whatever it is. If it's a Shopify store, if it's a local affiliate SEO site, if it's a YouTube channel, whatever it is, you're going to have to get that stuff working. However, to my knowledge, I believe you have to have a business registered in order to deduct certain transactions or purchases that business made. And if that business isn't in existence, then it becomes rather difficult and it becomes just more so a mess when you're doing your taxes. So if I were to just get started right now today, I would probably go and register the business first and foremost. And don't go to LegalZoom or any of those other companies. You don't necessarily need it if you understand how to set up a business for your state that you're in, and then get an EIN and get a state tax ID number. So what you do is you just go to Secretary of State, it might be Department of Commerce or something of the sort, depending on the state that you live in. You could just Google it and see there's probably going to be instructions from a website that'll tell you how you go about that process. So get that registered. The structure, I'm not really going to comment on because, again, I'm not a CPA. My business is currently an S Corp. I have had LLCs in the past, and I was advised by my accountant to switch over to an S Corp, and that is what I have. So take that with a grain of salt and consult your own CPA to figure out what works best for your situation. So the next thing that you're going to need, and this is what's going to be asked of you from an affiliate network if you're going to be doing local affiliate SEO, or even if you, I believe, are doing stuff with Shopify, you have to submit a W-9. And essentially what that is basically a form that you put your information on there, so your business name, your address, and then either your tax identification number or your federal EIN, employer identification number. It's basically a social security number for your business. You have to submit this to that affiliate network because if they pay you over $600 or any other type of business entity, you could be subcontracting web design services for another digital marketing agency, and they're probably going to give you this form as well, or require you fill out this form and send it to them. And what that allows them to do is be able to deduct that expense on their taxes, and they have your information for that because the regulation is about, I think, $600. If it's paid out $600, you have to have that in order to be able to deduct it. So again, check the CPA on the full-on regulations on that. But anyways, focus still on making money. Don't get tripped up and spend 5 weeks trying to figure out what type of business structure it is before you even go and buy a domain, because you need to get that stuff going first. And in the grand scheme of things, if you miss out on not being able to expense $30 or $50 worth of domains, hosting, and outsourced links, it's not the end of the world. And like I mentioned before, with having a business in place allows you to expense items that you purchase for your business. For example, like this laptop right here, this handy dandy little Chromebook that I use, fully deductible because the only thing I use that for is business. It's 100% business. The light that I'm filming this with, business expense. The phone that I'm filming this with right here, business expense. The voice recorder setup that I have right here, all business expenses. This Secret Lab Omega chair that I'm sitting on, business expense, because If I'm sitting in this chair, I'm working. Same thing with the desk that all this stuff is mounted on. All of that is a business expense. And if in some situations, for example, if you're someone who works from home online, you can deduct in many instances a portion of your rent or your mortgage based on what the square footage is of that office. Now, the IRS is very, 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 very strict when it comes to this, and you cannot have any personal items in this area where you are working in order for this to actually be a deductible expense. But it again reduces your tax liability because, okay, let's say your rent's like $3,000 a month or something, and if you had, to keep the math easy, we'll just say it's a third of the square footage of your place where you're living, your house, your apartment, your townhouse, or condo, whatever, then that's $1,000 a month, $12,000 a year that you can deduct from your business income taxes as a rent expense. So just keep that in mind. Again, CPA, you're going to want to definitely communicate that with them to ask about that, because that is a very, very, very tricky subject, and there's a lot of regulations that the IRS has on that. And one last note on the EIN, which again is just a identification number for your business. You can go and get that 100% free from the IRS's website. They have service hours, I think, like weird, it's like 7 a.m. to 10 p.m. or something like that, where you can actually get the number. But it's a free process, just takes a little bit of time. You can purchase the service from a company to have them do it, but it's actually quite simple. So anyways, on the subject of taxes, and there's a lot of stuff written down on here on a couple different sheets that I wanted to cover here in this video. And the first thing is that I noticed this a lot in the landscaping business when I had my company from 2011 to 2016. A lot of the colleagues that I met in that industry, and this is just human nature because you essentially attain a certain level of comfort and you don't want to go above because it's risky. You're going to have to invest money that you could potentially lose, and you definitely don't want to go below. So again, you don't want to risk money. So a lot of these guys were essentially maximizing the reduction of their taxes by only purchasing like new work trucks, new equipment, that sort of stuff at the end of the year, because there's certain deductions that you can take based on what the purchase is. And again, I'm not going to get fully into that because it's a whole discussion that a CPA can explain to you a lot better than I can. But a lot of those guys took advantage of that because again, it's there. It's law. That's just how it is. But what that does is that reduces the amount of profit that your business posts on the tax return that you end up filing. So the problem herein lies, and this is where my accountant had advised me that, okay, yeah, you do have to post a profit, because if you want to get a loan for, maybe if you want to purchase a new house, or if you want to purchase more houses to add to a portfolio of real estate properties that you're going to rent out or flip or whatever, or if you want to purchase new vehicles for yourself, all of those lenders, those banks and whatnot, are going to make sure that their person they're going to lend that money to actually has income coming in. And you have to be able to prove that with tax forms. So you have to pay taxes, again, because a lot of those guys wanted to reduce their tax bill. That's why they did that. But if you are going to get let's say you want to get a house and the mortgage is going to be $4,000 a month, you're going to have to be able to show that your business profits that much, and that's if you're usually in an LLC or a sole proprietorship, what's left over at the end of that is going to be paid to you as the owner in that profit, and then you're taxed on that. If you're an S Corp, for most instances, again, this is just how my experience has been, you as an owner get paid a salary, and then you get paid in dividends with what's left, some of the profit, and there's a whole host of other things in that. But either way, bottom line, you have to prove that you're making enough money each year that you'll be able to afford that type of purchase, whatever it is. If it's a car, house, a boat, camper, whatever it is, you have to be able to prove that. So obviously you don't want to pay tons and tons and tons of money in taxes, but if you want to be able to level up your life essentially with more property and more of those things and get loans for them, you're going to have to pay taxes. It's inevitable. Now for taxes at the state level, each and every single state's a little bit different. Some states have ridiculously high state income tax, like California. I don't even know the rate, but it's probably absurdly high. You go to Florida, or you go to Nevada, I believe. Arizona maybe as well. I know South Dakota falls into this category. There's zero income tax when it comes to state. So you just pay the federal and then that is it. They of course get their money out of other purchases. For example, I really like Florida. They have a little bit higher, I think, sales tax and real estate tax, but those are choices that you get to make with being there. Like I can decide, okay, I don't want to purchase something in Florida because of the fact that their sales tax is maybe outrageous, if that was the instance. Whereas if you're living there, you get taxed for the sake of being there. That is just the reality of it when it comes to where you live. You're gonna have to pay your federal income tax, and then there's the state income tax on top of that as well. Now, on the subject of tracking your expenses so that you're ready to go when it comes time to do your taxes, which again could be quarterly or could be yearly. You again talk with the CPA based on your situation. For most, it's probably yearly in most cases. What you want to be doing is every single little expense you track, this laptop here, or the outsourced services and that sort of stuff that you buy from somewhere like Legit or Fiverr or wherever you go, you need to track that so you know how much you're spending month to month and year to year, especially year to year for the tax purposes. Month to month is good so you know how much you're making each month as well, and we'll get into that here in a second with some of the profit from the month to month standpoint. But use a company like Wave Apps. I think it's 100% free. They have paid stuff I think that they offer, but also QuickBooks is another one out there, and there are other ones. I like Wave because it is really focused towards online businesses, so that will make things a little bit smoother because they understand the business model to an extent. And then also, I'm not one that focuses so much on my expenses. I really only emphasize my expenses when I'm putting specific funds, and when I say emphasize, I'm talking about worrying. Like, I'm not going to go worry about me going out and buying a new whiteboard or something like that, because obviously it's a business expense that I'm going to use and helps me stay organized. But when it comes to being a stickler for certain expenses that I purchase, like hosting, domains, and certain SEO stuff when it comes to the SEO sites that I build, or if you're someone that's doing Shopify, your product cost, and really just knowing your margin, that's really, really important. But I really like to know the ROI because that helps me make decisions for the future, because I can see that, okay, we have to invest X amount into this site, and it became profitable after X months, and after 12 months, it generated this much of an ROI. So granted, that's not necessarily tax related to an extent, but it's something to keep in mind. Because I'm always focused on growing revenue, because that's really what matters most. Because if you have the ability to just grow your revenue, you don't necessarily have to worry about the nitpicky tiny expenses. But again, my biggest recommendation though when it comes to doing expense tracking is either, depending on how many purchases you make in a day, either do them once a day, like right away in the morning or something, you do it from the previous day's expenses, or you do them every single time you make a purchase. If you're going to like Fiverr and Legit, you don't want to lose track of all the things that you bought. Either way, just figure out a system that works best for you, so that way you just don't lose track of what you've purchased and when you purchased it. Because the worst thing that you could possibly do is have to go look through previous PayPal statements or your bank statements or whatever, and look through and think, okay, I spent $60 at Legit Marketplace. Oh, what was it? And then you have to go dig through all of the transactions on Legit or on Fiverr, or maybe it was something related, like you purchased it from a gas station. You're like, okay, well, crap, I can't find that receipt anywhere. Great, now I'm gonna have to. Well, it can be a mess. So you just keep up on it day to day, maybe week to week if you're not doing a lot of expenses, and just do it on Friday when you're done for the day or right before you're done. So that way you have that all on file and everything is neat and organized and it's up to date, because you don't want to have to look back on 6 or 10 or 12 months worth of expenses and then have to divvy out what was a business purchase and what was not. And on the note of staying organized, one of the best things that you could do is have a business checking account that you use for all your business purchases, or business credit card, or business PayPal with a PayPal debit card, so that way you can just track all that stuff really, really easily because it's all right in there. And using your personal bank accounts for personal purchases only, keeping those things separate so you stay organized. And here's where one of the biggest questions came about, was the whole tax side of things and how much do I have to pay and all that sort of stuff. So you're going to have to look at your situation with where you're at, what your tax bracket is. This can vary tremendously depending on your business structure, because of the fact that every single business structure is a little bit different. There's also going to be differences from state to state. But for the tax bracket, where you essentially, I'm not going to say assume, but you kind of assume that, okay, I'm going to have to pay X percentage of my profit into tax, or X percent of the business profit has to get paid in federal tax and then state tax. The IRS has all that stuff on their website. I would recommend checking that out so that way you kind of know. Now, a good way to essentially prepare yourself for the upcoming tax bill that may occur next spring, let's say it is, or next quarter or whatever it is basically just look at your month-to-month expenses from your revenue and your expenses that come in. So let's say the business did $10,000 revenue, you had $5,000 in expenses that were business expenses, leaving $5,000 profit. What you do with that profit will vary depending on the business structure in terms of how it's actually taxed. But for simple sake, let's just say you have a sole proprietorship or an LLC. It keeps it very, very simple. So it's just $5,000 profit, and that's all you got to worry about for that. We'll keep it simple. This is just hypothetical. It's not CPA advice, legal advice, any of that. But let's say that you have that $5,000 posted profit. What will probably serve you best to prepare yourself for next tax time when that tax bill is due is to go and overestimate the amount of money that you would have to pay in taxes. We're going to overestimate and say that 40% of our profits are taxed. So of that $5,000, 40% of that is going to go to taxes. We'll just keep the number easy like that. So that would mean $3,000 would be the actual profit that we would keep. So what you would do is you take that $2,000 out of that $5,000 and put it into a savings account, and you just let it sit there. So now if you're the personality type that is going to be tempted to see that and go spend it on something stupid, then you probably might want to talk to an accountant about filing quarterly, so that way those funds aren't just sitting there for, could be 11 more months. So that's something to keep in mind, is essentially just taking whatever that percentage of that profit is, and again, that's hypothetical. Talk to a CPA that knows your business and your situation very well for how exactly to do it, but this is what works good for me, is just taking whatever that profit is per month, setting it aside, and not worrying about it until you have to file the return and make the payment and that sort of stuff. So if you're someone who's getting started right now, or you've been going at it for a little while and you don't have a business registered, just get a business registered, figure out which one's going to work best for your situation and your financial situation, that sort of stuff. Get that registered, and it shouldn't take you much time at all. We're talking a couple hours at most. If you want to pay for LegalZoom to do it, you can do that. It is really expensive, so if you just learn the process, and it's online paperwork, it's really simple. Get that going. But still, focus on your revenue and creating assets that are going to grow your revenue. But then also, as you're spending money in your business on business things, and you're acquiring things, whether it's a new laptop, it's a new computer, it's more websites, you're getting domain, you're getting hosting, you are getting outsourced services, or whatever it may be, track every one of those things day to day, so that way at January 1st, when the new year comes around, you don't have to go through an entire year's worth of transactions to assess what your taxes are going to look like and what your expenses are for the year. So anyways, if you got this far into the video, I'd appreciate if you went down below, dropped a like on this video, and if you want to join the ever-growing family, be sure to go down below, smash that subscribe button, hit the bell for notifications so you know when the newest content comes live. And if you want to get guided step-by-step training on how to start and build and grow a local affiliate SEO business, where you build a website, rank the website, and monetize it with a local affiliate offer, we have links right down below to both of our courses where you can get access to guided step-by-step training and a whole lot more. So hopefully this answered a lot of you guys' questions. If you have any other ones, be sure to go down below and ask in the comments. And with all of that said, thank you so much for watching, and get to work.